Hello everyone, welcome to my YouTube channel. In this channel, we will be talking about the different types of trading patterns. So this channel, first of all, it's for newbies that are down into the process of trading, for experienced traders, and for those that are looking to know how they can trade patterns. This channel is for you. So without wasting much time, let's dive into the patterns. Our very first pattern is a reversal pattern, the double top pattern. So where do we find this pattern? We can find this pattern in an uptrend where the price makes a push upward toward a certain resistance level. Now, some traders always tries to take some profits, and it will cause the price to push downward towards this neckline here. So you have a retracement that will push towards this neckline, and the price will try again to move upwards above this previous peak, but an attempt will fail. Why? Because the momentum diminishes, which caused the price to be pushed downward again towards this neckline. Now this pattern is only completed once there is a breakage of this pattern. So once this pattern is broken and a candle closed below this neckline, then you can confirm that this pattern is completed. Now how can we enter into this trade? We can enter into this trade in two ways. It's either we enter the trade on a breakout, or we can enter the trade on a retracement. So once the candle breakout downwards towards this neckline, you can enter the trade, or we can wait for a pullback towards this trend line. Don't worry, we will see this later on in the channel. So where do we place our stop loss? As you can see on the chart, our stop loss will be around here, and our price target is always the distance between this peak and this support line, which will give us a projected price of about here. So once again, let's see an example of a double bottom, a double top pattern. Now we see that the price has been pushing upward towards this resistance level, and the price again tries to make a push downwards, push upward again to surpass this previous peak, but an attempt failed, and the price push again downward towards this neckline. Now once the candle closed above, or if a candle closes below this neckline, this pattern is completed. And the way to enter this trade is either you enter this trade on a breakout, or you can enter the trade on a pullback once the price comes back towards this neckline. The best way, or the safest place to trade, is the pullback. So I usually prefer the pullback, right? So let's see where you can place your stop loss. Now on this chart, we see that if we enter our trade here, if we enter the sell order here, our stop loss will be the high of the previous three candles and 5 cents. That is 1, 2, 3, and 5 cents will be about the distance here, about here. Now if we enter this trade on the pullback and we find something like a doji candle or a hammer, let's say here on this candle, then previous three candle will be 1, 2, 3, the high of the previous three candle, this distance, and 5 cents here. So don't worry, we will look at a live example of a double top pattern so that you can better understand what we're talking about. So this is an example of a double top pattern. Please, if you like this channel so far, kindly subscribe. It will go a long way. Don't forget to like and hit the notification bell so that anytime we bring up a video like this, you will be the first to be notified. Okay, so if we consider this as our top, then this is our double top, right? And this is our neckline here. This is our neckline. This is our neckline, right? So we see that confirmation only occurs once this price has been broken, right? Once this price has been broken, we can confirm that this pattern is valid. Now you can either enter this trade on the brokerage of this neckline or on the retracement. So let's say we enter this trade here. Now the problem with entering this trade on the breakout is that this candle could easily move upwards back into this pattern, right? So the safest place to buy is the retracement. Let's say we enter this trade here. Where do we place our stop loss? Our stop loss is 1, 2, 3 candles high of the previous 3 candles. That is somewhere around here. You can see clearly that there is a formation of a doji candle here. So we would have entered this price at the formation of this candle, or let's see at the open of the next candle. So once we see the formation of this doji here, for example, or hammer, we can enter the trade here, and our stop loss again will be previous 3 candles, 1, 2, 3. High of the previous 3 candles and 5 cents will be about here. So you see that our stop loss will have been closer as compared to a stop loss of about here, right? So that's the difference between entering the breakout and the retracement. So let's do a recap of the double top pattern. So once again, we said on the double top pattern, it's a bearish reversal signal indicating a potential shift in the prevailing uptrend. Confirmation occurs when prices break below the interim trough between the 2 peaks, M shape on the price chart. So our next pattern will be the double bottom pattern. Now, where can we find this double bottom pattern? This double bottom pattern can be found mostly in a downtrend, right? So in a downtrend, we will see price making this push downwards towards this resistance level here, towards a certain resistance level, and the price again will try to push upward towards this neckline, but then pushes again downwards towards this previous low, and the price again makes another push towards this neckline, forming a W-shaped pattern. So the pattern only completes when there is a brokerage on this neckline upwards towards this neckline, where price breakout and closed above this neckline. Our entry again can be here just above the neckline or at the retracement. So it's either the price you enter the breakout, or you can enter the price when it retraces back to this line. So don't worry, we'll see an example of this. So once again, our stop loss is about this distance, and our target profit will be the distance between this trough and this resistance level, which is now previous support, which is now resistance. Distance between this peak and this neckline, which will give us a target of about here. So let's see an example on this chart. We see that price has been moving downwards towards this resistance level here, and it makes a push upwards towards this neckline, and once again the price tries to push downwards again, and then there is a push again upwards towards this neckline. This shows us there's a shift from the market optimism to market pessimism to optimism. So the price again tries to push above this neckline, closing above this neckline, confirming this pattern. So once again, you can either enter the trade on this candle here, and once again, if you enter the trade here, your stop loss will be 1, 2, 3, the low of the previous 3 candle, and 5 cents about here. If you enter this trade on the retracement, let's say this candle here, then your stop loss again will be 1, 2, 3, will be about here, the low of the previous 3 candles and 5 cents. So let's see this pattern on a live chart. So here is an example of a double bottom pattern. So if we consider once again this as our bottom, then this is our double bottom, right? And this pattern is only completed when there is a break of this neckline here. So before we get into the entries of this pattern, our target price is this distance from here to here, right? So we can either enter the trade on the breakout. If we enter the trade here, then our stop loss is previous 3 candles, 1, 2, 3, about this point here. But we can also enter the trade on the retracement. Now this price can push downwards below this neckline, but you have to wait when this price closes above this neckline. That's when the price is about pushing upwards above this downward movement, and you find something like a doji candle here, for example this candle. If we place our order here, then our stop loss will be previous 3 candles and 5 cents, 1, 2, 3, will be a distance about here, will be about this point. So you see that our stop loss is closer on the retracement than on the breakout, right? So one way you can maximize your profit is through trailing stop loss. That is, you shift your stop loss 3 candles behind the targets and 5 cents, just like for our stop loss when you place your order. Let's say we are here, our target has been hit, so we can count 1, 2, 3 candles. We place our stop loss at the distance of about here. Let's say this target was met, so we can shift our stop loss depending on where if we are on this candle, then our stop loss will be about here. We can shift our stop loss to about here. So you can always trail your stop loss the lower of 3 candles and 5 cents. So that's it for a double bottom pattern. Please, if you like this video so far, kindly subscribe and like, also hit the notification bell so that you can always be the first to be notified anytime we have a video like this. It will go a long way. So let's move on to our next pattern. So let's do a recap of the double top, double bottom pattern. We said in a double bottom pattern, it's a bullish reversal signal that suggests a potential change in the prevailing downtrend. Confirmation occurs when prices break above the interim peak. It's a W shape on the price chart. So let's move on to our next pattern. It's a reversal pattern, a head and shoulders pattern. Now where do we find this head and shoulders pattern? We find this neck and shoulders pattern in an uptrend. You see that in an uptrend, if you find a pattern where the price tries to push upward toward a certain resistance level and retraces, because traders always try to take some profit, and then makes another push again above, or that surpasses this peak, above a new resistance level, forming the heads, and then price again will try to move downwards towards this neckline, and then again there will be another push trying to surpass the previous peak, but an attempt will fail, and it will bring the price downward towards this neckline. So once again, how do we enter this trade? We can enter this trade on the breakout of this neckline or on the retracement. So our stop loss again is somewhere around here, and our target price is this distance between this peak and this neckline, which will give us a potential price target of about here. So let's see an example. This is an example chart of a head and shoulders pattern. So we see that the price moves upward towards a certain resistance level, push downward, it push upwards again towards this high here, forming the head, push downwards again, it makes another move again, forming the right shoulder, but an attempt will fail, and you come back to this neckline. So once again, you can enter the trade on the breakout. So once this candle pushes downward and closes below this neckline, that is when this pattern is completed. So you can enter the trade on this candle, and your stop loss will be 1, 2, 3 candles high of the previous 3 candles and 5 cents. Or you can also enter the trade on the retracement. Now let's see an example of a head and shoulders. Once again, here is an example of our head and shoulders pattern, and if we consider this as our head, then this is our shoulder, right? And this pattern is only completed once there is a break of this neckline. So if this neckline is not broken, this pattern is not completed. So once we see this bearish candle closing below this neckline, then we can confirm that this pattern is completed. So once again, you can enter the trade on this breakout, and again on this example, we see that our stop loss will be previous 3 candles, 1, 2, 3. High of the previous 3 candle will be somewhere around here, 1, 2, 3, and 5 cents. Here will be our stop loss. Or if we enter this trade on this dodgy candle here, let's see, on this candle, then our stop loss will be 1, 2, 3, will be a distance just about here. So it's always closer to place your order on the retracement as to the breakout, right? So once again, our price target will be the distance between this neckline. In this case, we have this distance from here, and if we project it down here, it will give us this distance here. So in this case, we would have met our targets. Like I said, you can always throw your stop loss to maximize your profits. All right, so this is for a head and shoulders pattern. So let's do a recap of the head and shoulders pattern. Once again, please don't forget to subscribe to our channel, and you like and hit the notification bell so that you'll be notified every time we put up a video like this. So let's do a recap of our head and shoulders pattern. We have said on a head and shoulders pattern, a reversal pattern is a reversal pattern that is formed after an uptrend. The pattern is completed when the price goes down and closes below the neckline. The distance from the head to the neckline is our price target. So this takes us to our next pattern, the inverse head and shoulders pattern. This is just the opposite of a head and shoulders pattern. Here, this we can always find this in the downtrend. So the price always tries to make a push downwards. There will be a push upward towards this neckline, and then a further push downwards, forming a new low. And then the price again tries to move upwards towards this neckline, and this will give a movement downwards, forming the shoulder. Forming the shoulder, and here we see that the price again will try to move upwards towards this neckline. So where do we enter this trade? First of all, this pattern is only completed once this neckline has been broken. So we can either enter this trade on the breakout or on the retracement. Our stop loss will be around here and our price target will be around here. So let's see an example of a head and shoulders pattern. So here's an example of a head and shoulders pattern where the price pushes downwards, it moves over towards this neckline, it forms a new low, making the head, and it will therefore push upwards again, forming the right shoulder towards this neckline. Then there will be a push downwards that will push forward again towards this neckline to complete this pattern. So this pattern is only completed once there is a breakage of this neckline. So it's either you enter the trade on this candle, or you can enter the trade on the retracement of this candle, retracement of this neckline. So let's first consider entering the trade here. Our stop loss will be 1, 2, 3, will be about 3 candles, low of the previous 3 candles, and 5 cents. So alright, we could also enter this trade on the retracement. So you see that this price push upwards, it retraces downwards. I told you it could move downwards towards this line, but you have to wait when it pushes again upwards to above this line, and once the price closes above this line and it surpasses these previous candles, as you could see breaking out on these candles, you could place your order just above this level. So let's do a recap of the head and shoulders. But before we do a recap, let's see an example of a typical head and shoulders pattern, right? Once again, we are looking at the inverse head and shoulders pattern. So if we consider this as our head, then this is our shoulders, right? Now again, this pattern is only completed once there is a breakout, of this neckline. So now the way to draw your trend line, this is not a class for trend line, but as you may already know, it's either you are considering the candles or the wick. So in this case, I'm considering the candles. So let's say here is our head and shoulders pattern. Now, where do we take our profits? Our profit is a distance between this resistance and this trough here, and if we project this price upward, it will give us a price target of about this distance. Now, where do we place our order? Where do we take our entries? So we can either enter into this trade on the breakout of this pattern. In this case, this pattern is only completed once this candle is closed above this neckline. So if we enter the trade here on this candle, then our stop loss once again will be 3 candles, the lower of 3 candles and 5 cents. It will give us a distance of about, it will give us a price target of about this point here. And if we enter the trade on the retracement, then we are waiting for this price to retrace back into this neckline. And if we find something like a doji or a hammer, we can enter this trade, right? So let's say this price retrace on this back to this neckline, so we can enter the trade here on this candle, and 3 pips, the lower of 3 candles and 5 cents will be 1 2 3, and 5 cents will be about a distance just at about this area, right? So entering the trade on the retracement is far more better than the breakout. So that's it for our head and shoulders pattern. Our next pattern we're going to be looking at is the, let's see our next pattern. Now before we look into our next pattern, let's do a recap of our head and shoulders pattern. So we have said it's a reversal pattern that is formed after a downtrend, completed when the price goes up and closes above the neckline. The distance from the head to the neckline is our price target. Alright, so let's move on to our next pattern. Please, if you are enjoying the video so far, kindly subscribe to our channel and don't forget to like and hit the notification bell.
This is a continuation pattern where you see the price coming from beneath. It's normally it's a pause in an uptrend. It's a small break where the price will keep moving towards the direction of the bigger trend. So we see that the price is moving upwards towards this level up here, and we see that the converging lines are more steeper than the fallen wedge we had for the reversal pattern. So here our fallen wedge pattern is just a continuation pattern. So once again we still find our price making a series of lower high and a series of lower low, right? So our price target again will be this distance from here at the highest point of the wedge to this price here, and it will give us a projected target of about here. So let's see an example of a fallen wedge. So here's an example of a fallen wedge where we have this breakout from this pattern. So we could enter this trade on the breakout, or we could also enter the trade on the retracement. So it's always better we have a live example so that we can better understand our entries. So let's consider this chart. It's a live chart. So once again, if we consider this wick here as our lower lows, then we can also consider this wick here as our lower highs. And once again, this is the formation of our fallen wedge pattern. We see that the price has been moving upwards, and this is just a temporal pause or a break on the movement of this price. So once again, our target price will be, or our targets will be this distance from here, and if we project this price here, it will give us the distance of about here, the price of about here. So one way we could enter this trade is through a breakout, or if we had a retracement of about here, we could also enter the trade, but most often than not, you will find a breakout trade on a fallen wedge pattern. So you already know how you can trade your stop loss. So you can always shift your stop loss. 3 candles, the lower of 3 candles are 5 cents. So if, for example, we enter this trade on this breakout candle, then our stop loss will be 1, 2, 3. It will be about here and 5 cents. So let's move in to our next pattern, but before that, let's do a recap of the fallen wedge. So we said in the fallen wedge continuation pattern, it occurs within the context of an existing downtrend and occurs within the context of an existing uptrend, not downtrend. The lower trend line is steeper than the upper one. The pattern occurs when the price breaks below the lower trend line. Okay, so let's move on to our next pattern. Once again, let's do a recap of our fallen wedge pattern. So we've said occurs within the context of an existing downtrend. The lower trend line is steeper than the upper one. The pattern occurs when the price breaks below the lower trend line. So this takes us to our next pattern. So here is our rising wedge pattern. So we saw a rising wedge pattern when we were looking at the reversal patterns, and now we are seeing a rising wedge pattern again as a continuation pattern. So the difference is that the rising wedge pattern as a continuation pattern is just a pause in a trend. So it's not like a typical rising wedge pattern for a reversal pattern where we are looking at the reversals. So here is just a pause on the continuation of the trend. So we see that the price was moving downwards, and we had a series of higher high and higher lows. So our target price again will be this distance from here to this point right here. So once again, it's better we look at a typical example of this pattern. Once again, here is an example chart of a rising wedge pattern, but let's talk about this pattern on a real live chart. So let's try to spot our rising wedge here on this pattern. We can say that this is our higher high, and we can also say that this is our higher low, right? So once again, you can enter this trade on this breakout candle, and our target price will be it could be this distance from here to about, let's see, projected price to be here. Sometimes I like to take my profit at the 50% of this target price. I can take 50% here, 25% here, and the remaining 25% at the end of this target. So if we enter this trade on this breakout, once again our stop loss is 1, 2, 3 and 5 cents this week here and 5 cents above, right? So we could also enter this trade on a retracement. If we had this retracement here back to this line here, but in this case we had a breakout trade. So let's move on to our next pattern. Once again, a recap of our rising continuation pattern. We said develop within an existing uptrend, converging trend line sloping downward, confirm when the price breaks above the upper trend line. Okay, so our next pattern is the bullish rectangle. So the bullish rectangle is characterized by the upper and lower trend lines forming the rectangle shape. So traders anticipate that if the price break out above this candle, it's a buy for traders. So first of all, this pattern occurs in an uptrend. So where we see the price moving towards this level here, and we have a consolidation where the price is moving towards forming this rectangle shape here, and once the price is broke through this line here, you can place your entry. So where can you possibly have your target price? Your target price, yes. So your target price will be, you can say this distance between the rectangle, you can have that as your target price. But then let's see an example of this bullish rectangle. So here is a chart of this bullish rectangle. So we can also look at live examples so that we can better understand the entries and our target price. So let's look at an example. Once again, here is a chart of our bullish rectangle. So first of all, what we can notice is that our what we can notice is from this pattern is that price makes a move above this line here. This candle here confirms the validity of this pattern. So once again, you can always enter the trade on the retracement, and here, as we could see, there is a formation of our doji candle here, and we could enter this trade on this candle, and our target price, our stop loss will be previous 3 candles, and 5 cents will be just about here. If we enter this trade on this bullish candle, our stop loss will be 1, 2, 3, and our stop loss will be about this area. So as I always say, this price could easily move back into this pattern. So always wait for this pattern to close and retest this line, and you can enter the trade. The safest way to enter the trade is on the retracement. So you could also place your target price from the length of this price here to the highest point of the rectangle, which will give you our target price of about here. And once again, if you have this target, your target was hit, you could also trade a stop loss. Of course, you already know how to trade a stop loss. So that's how you can enter the trade for a bullish rectangle. So let's do a recap on the bullish rectangle. So once again, we said the pattern typically forms within an uptrend. It's characterized by two horizontal trend lines, confirmed when the price breaks above the upper resistance trend line. So this takes us to our next pattern. So our next pattern is the bearish rectangle. So we already know that the bearish rectangle is a reverse of the bullish rectangle, where we see the price moving downwards, forming this parallel shape, these parallel lines here, and we have our consolidation price within this range, forming this rectangle. So it's the same way we can enter the trade for a bullish rectangle. It's the same way we can enter the trade for a bearish rectangle, right? So our entry will be here, just below this line here. Our target price will be the distance from this price to this point, this line here. So on a chart, this is how we can see a bearish rectangle, and we see that this pattern is only completed once this price, this bullish candle, this bearish candle has closed below this line. So we could either enter the trade here, or we could wait for the retracement, but it's always better we see a live example so that we can better understand our pattern. Again, here is an example of a chart where we can spot our bearish rectangle. So if we consider again once more that this is our upper line, then we can also consider this point here as our lower line, right? So we see that this candle, this price breaks below this pattern, confirming the pattern. So we can either enter the trade on this breakout, and if we enter the trade on this breakout, our stop loss will be 3 candles, 1 2 3, 3 candles and 5 cents just above this candle here. And if we enter the trade on the retracement, then our stop loss will be again 3 candles above and 5 cents. So you can always scroll down to the smaller time frame for entries, right? So that's how we can enter the trade and exit the trade for a bearish rectangle. So what will be our target price? Again, we already know that the distance from here to here will give us our price target. But then I always like to take my profit at the 50% level, and I can also take 25% and the remaining 25% at the end of this target. So let's do a recap of our bearish rectangle. So once again, this is found in an existing downtrend that acts as a continuation pattern, confirm when the price breaks below the lower support trend line. And it takes us now to our next pattern, the bullish pennant. So here, the bullish pennant, we see that the price moves upward towards a certain level here, and this creates a flag, and this is always characterized by a symmetrical triangle or a smaller rectangle where you will find these converging lines that forms the pennant. So one way we can enter this trade, first of all, this pattern is found in an uptrend and it's just a pause in the trend. And one way we can enter this trade is on the breakout just above this flag here. So our price target will be this distance again from here to the highest point of the wedge, and our price target will be this target up here. So let's see an example of a bullish pennant. So we see that here price was moving upwards. This was already an established trend, so this was just a temporal breakdown, a temporal pause of the trend. So this price was moving upwards, then we had this retracement and we had this symmetrical triangle here where the price breaks above this triangle and closes above this line, confirming this pattern. So you can either enter the breakout or you can wait for the retracement. Like I always say, the safest place to place your order is the retracement. So you can place your order on the retracement. For example, we see this formation of this candle here, and we can place our buy orders. So if you enter this trade here, our stop loss will be 1, 2, 3 and 5 cents. But then if you wait for the retracement and let's say you enter the trade on this candle, our stop loss again will be 1, 2, 3 and 5 cents. So that's how you can enter and exit the trade on a bullish pennant. So let's see a live example first of a bullish. Once again, here is our chart. So let's see if we can spot a bullish pennant. Please, if you like this video so far, kindly subscribe to this video and don't forget to like the like button and also hit the notification bell so that anytime we upload videos like this, you will always be the first to be notified. So here we can clearly see our bullish pennant. So if we consider this as our wick, and we can also see that we had a higher low here forming this pennant. So right, so where is our price so where is our Henry? Our Henry again is on the breakout of this pennant or on the retest. We already know how to enter the trade. So here we can enter the trade on the breakout or on the retest, and our price target again will be this distance from the highest point of the wedge to this price movement here. So if we project this price, it will give us this target up here. And once your target is hit, one thing you can do is that you can trail your stop loss. What do I mean by trailing your stop loss? You already know. You can move your stop loss. Let's say your price is here on this candle. You can count 1, 2, 3 candles and 5 cents, and you can place your stop loss here. But then if we enter this trade on this breakout candle here and we count 1, 2, 3 and 5 cents, our stop loss will be here. If we also enter on the retest, our stop loss will also be around here. So here is a typical example of a bullish pennant. So let's do a recap of the bullish pennant. So we have said a bullish pennant occurs within the context of an existing uptrend, brief consolidation before the resumption of the upward price movement, confirm when the price breaks out above the upper trend line. So let's move to our next pattern, the bearish pennant. So the bearish pennant, we have it's an opposite of the bullish pennant. You see the price moving downwards towards this level here, and price is making a lower high and also making a higher low, forming this converging wedge, these pennants here. So one way to enter the trade is on the breakout or on the retest. Our stop loss will be just above these pennants here. So we can see this on this chart where price has been moving downward, and there will be a little push upwards towards a certain resistance level, but then the price will break below this line, confirming this pattern. So let's also see this on a live chart. So once again, here is a chart where we would like to spot out our bearish pennant. So if we consider once more that this is our higher low, then we can spot out our higher high on these wicks of these candles. So here is our bearish pennant. We see that the price has been in a downward trend and was just a little pause on this trend, which will make this price to continue downward. So this price is just a little pause of a smaller uptrend. So we see that the price is complete, or this pattern is completed when the price actually breaks below this line. Now, one way you could enter the trade, as we always see, that you could either enter the trade on this breakout or on the retracement of this line. So we already know how to take our profit or to target our price. It's distance from this here, about there, to, if we project this price downward, it will give us a distance of about a profit target of about here. So that's how we can enter the trade for a bearish reversal, a bearish pattern, a bearish penny. So let's move on to our next pattern, but before then we should do a recap of the bearish pennant. So we've said a bearish pennant occurs within the context of an existing downtrend, a brief consolidation before the resumption of the downtrend downward price movement, confirm when the price breaks out below the lower trend line. So this takes us to our next pattern. So here is our next pattern. It's a bilateral pattern, the ascending triangle. So on the ascending triangle, this price can move in both ways. So we see that the price has a constant price up here, and there is a movement towards a certain resistance level, and at this level you will see at least 3 or 4 touches on this line, and the price could either break up or it could either move downwards. But if we find this price that breaks upward, then we can wait for the retest and we can enter the trade. But if you find the price moving downward, we could also wait for the retest and we could enter the trade. So it's a bilateral pattern. So let's see an example of a bullish case. So here is an example of an ascending triangle where the price makes a movement upward and closed above this line. We see that this line here, this price here was constant, and there were at least 3 to 4 touches on this line, and this candle closed above this line. So if we enter this trade here on the breakout, then we can always put our stop loss 3 candles and 5 cents below. So once again, we should check, or we should look at a live example so that we can better understand an ascending triangle. Once again, here is a chart where we can spot our ascending triangle. So if we consider this as our higher low, then we can clearly see that this is our line here, right? So we see that this line is constant and the price makes a push towards this line. So here also we found out that this candle closed above this line, confirming this pattern. It therefore means that this pattern is valid. So we could either enter the trade on the breakout, or we could also enter the trade on the retracement. For example, this doji candle here that hits this line back again, we could enter the trade and we could place our stop loss. For example, if we enter the trade on this breakout, our stop loss again is 1, 2, 3 candles. It will be about here and 5 cents. Or if we enter the trade on this candle, and our stop loss again will be 1, 2, 3 and 5 cents about here. So it could be here, or it could be the other way, about here. Oh, 1, 2, 3. So yeah, so that's how we can enter the trade for this pattern, and our projected price target will be this distance from here, and it will give us price target of about here. So that's how we can enter and exit the trade for an ascending triangle. So let's do a recap of our ascending triangle. So we can clearly see that an ascending triangle, the upper price is constant and the lower price keeps on moving towards the upper price. So let's look at our next pattern, a descending triangle. This is just an opposite of the ascending triangle, where the price, instead of moving upwards, the price was moving downwards, and the price that was constant was on the troughs. And then we see that our price was making a lower high, forming this triangle here. And then we could have this price moving upwards. It could either break outwards, upwards, or downwards. So we will know this if we wait for the breakout or the retest. So your entry can be here, just above this candle, this pennant here, this triangle. And our target price again will be this distance from here to this trough, and will give us a projected target of about here or about this target. So let's see an example of descending triangle. So here's an example of a descending triangle where the price was making a downward movement, and we see that the price was, the pattern was confirmed when this price closed below this line. So we could either enter on the breakout or we could enter on the retracement. If we enter on the retracement, let's say we enter on this candle here, our stop loss will be 1, 2, 3, about here. And if we enter on this breakout, then our stop loss will be 1, 2, 3, will be here. So but it's always better we see this on a live example. So let's look on this chart if we can find, or if we can spot our bearish triangle. So let's say this is our constant, our line here, and we could also say that this is our lower high that has been formed on this upper trend line here. So this is our triangle, right? So let's say if we have this as our triangle, so what we are saying is that the confirmation only occurs if we have a breakout of this line here. So you could enter this trade on this bearish candle here. So our stop loss will be 1, 2, 3, this candle, and 5 cents. If we enter this trade on the retracement, let's see on this dodgy candle here that touches this line, then our stop loss will be 1, 2, 3, will be here. So it will be closer if we enter the trade on the retracement here, rather than when we enter the trade on the breakout, which will be about here. So you see there is a difference. So it's always better you enter your trade on the retracement. So our profit targets, as you may already know, we could say that our profit target will be this distance. It will give us a projected price of about here. And as you may already know, I always like to take profit, the 50% of this projected price, and 25% here, and the remaining 25% at the end of it. So that's it for this pattern, and let's do a recap of this triangle pattern. So just a quick recap on descending triangle. We've said the lower price is constant and the upper price keeps on moving towards the downward price. So this takes us to our next pattern, the symmetrical triangle, right? So once again, here is our symmetrical triangle. This pattern is a bilateral pattern and it could go both ways. We could have this pattern. The entries can be both ways on this pattern. So this is formed first of all by a series of two converging lines, that is connecting a series of sequential peaks and troughs. So the height of each side it's about of equal length. So let's see an example. First of all, we can enter this trade on the breakout, as you could see on this chart here, and our target will be the distance between the highest end of the triangle to the other end, which will give us a price target of about here. Or if we enter the trade here, it will be the distance between these it will be the points between this entry here and this target price here. So let's see an example. So here is an example on this chart of a symmetrical triangle. So we see that this length here is about equal length on this other side, right? And we're saying that the target price is this distance from the height of this triangle here to this trough. So we could either enter this trade on the breakout, in this case this candle here, or when this price comes back to this line here, we could either enter the trade. We already know how we can take a stop loss or to place our target price. So let's see an example on a live chart how this pattern. Once again, here is a chart where we can spot our symmetrical triangle. Please, if you like this video so far, kindly subscribe to my channel. Also hit the notification bell and like the like button to show your support. It will go a long way. So let's see if we can spot out a symmetrical triangle. Here we see that if we have this as our trend line, and we also see that there is these lows can be connected with this line, then this already gives us our symmetrical triangle, right? You see that the sides are of equal length, and as we rightly said before, that your target price will be this distance from the high to the low, which will give us a projected price of about here. So we see that we could either enter this trade on this breakout or on the retracement. So once again, you already know how to place your stop loss and you know how to enter the trade. So this is an example of a symmetrical triangle, and I think it's pretty clear. So let's do a recap of a symmetrical triangle. So let's do a recap on the symmetrical triangles. Please don't forget to subscribe to my channel if you like this video so far, and hit the like button and also the notification bell. So on the symmetrical triangle, we've said all three sides are of equal length. A continuation pattern that usually forms during a trend, whether it's an uptrend or a downtrend. So this takes us to our next candle, the cup and handle. So our next pattern is the cup and handle pattern. So this pattern can be found in an uptrend where the price has been making a push upward towards a certain resistance level, and some traders tries to take some profit, and the price will retrace, forming this cup shape structure, and the price tries to move again above this resistance line but failed, and it will retrace a little and forming this handle here. So our possible entry could be at the breakout of this handle here. So the price can move up and break out on this resistance line, and we could enter the trade also if this price breaks above this line, or if this price retraces back on the neckline. So there are two ways you can enter the trade. It's either you can enter the trade once the price breaks on this handle, or once the price breaks above this trend line and closes above this trend line. You can confirm that the pattern is valid, and for better entries you can also enter on the retracement. So we will see this later on. So here's an example of a cup and handle pattern. So we see that this price makes this retracement, and here is our cup shape structure, and once this price breaks above this handle here, we can enter this trade, and here was our resistance line. For example, we could also enter the trade once this candle also closes above this line. So let's see a live chart to better understand our entries. So here is an example chart where we can spot out our cup and handle. Please, if you like this video so far, don't forget to subscribe to my channel and also hit the notification button and like the like button so that we can always send you a notification, or a notification can always be sent to you anytime we upload a video. So let's see if we can spot our cup and handle pattern. If we consider this as our cup, then this could be our handle, right? And what we are saying is that once there is a breakout of this cup shape structure here, then we can enter the trade. So we can see that there was a strong breakout on this cup shape pattern here. So our target price on this pattern will be the distance from this neckline. Here is our neckline. It will be the distance of this resistance line. In this case, this distance from here to here. So it will give us a price target of about this distance. So for the cup and handle pattern to be valid, the cup should be so deep for you to trust this pattern. So here is our cup and handle pattern. And let's do a recap. But before we do a recap, let's see where we could place our stop loss. If we enter our if our entry was here on this bullish candle here, then our stop loss will be 1, 2, 3 candles and 5 cents. Our stop loss will be down here. And if we enter on the retracement, here we had the breakout, so we could have just placed our stop loss below here, and that's how we would have entered this trade. So let's do a recap of the cup and handle pattern. Once again, we've said with the cup and handle pattern, the cup formation happens when the price moves in an uptrend. The pullback before the continuation of the trend. The profit target is the distance between the right peak of the cup to the bottom of the candle. Okay.
So if you can master only these patterns, and you can't master the patterns if you just watch this video once, you need to watch the video over and over again. The goal is to grasp the concept, so it doesn't matter if you watch the video. Try and bookmark the video and it will help you. So if you have been losing money in trading, or you are new to trading and you don't know where to start, I can help you. I can bring you up to speed. We do have a trading group where we post profitable trades every single day, and we have been killing it. Here are some examples of our winning trades: 49%, 125%, 66%, 58%, 68%, 28%. So all what you need to do is to send me an email at robinsoncryptotrading@gmail.com, cryptotrading@gmail.com, for a one-time fee of $497. You will be entitled for a 6-month subscription. Now the group pays for itself. You earn while learning. So please, if you are also in the United States, you can use Mexi. Mexi has the lowest fees, the highest profits, and if you use the link in the description below, you will have up to 50% reduction in trade fees. Now, you will also need a VPN service. You can also use a VPN service such as NordVPN, and if you use the link also in the description below, then you will have a huge price reduction from the normal price. Please, if you like the video so far, don't forget to subscribe to my channel and like the like button, and also hit the notification bell, because I'll be bringing you more content like this.